Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In yesterday's action, we saw a sharp sell-off. It all came from the report that the unemployment claims were higher than expected, coming in at 1.4. The expectations was for a 1.3 million increase. Initially, the market shrugged it off and we traded up right to that 3280 level. And this is a real thing. I've been talking about that being a major pivot number, 3279.99, and the market reversed from there. As the session went on, we started to see sentiment continue to deteriorate. Finally, we saw profit taking on a lot of the big stocks, the Apples, the Teslas, Microsofts. It went down the list. Last week, I began to discuss this new leadership. Thursday's action emphasized this at a great level. We saw the Russell unchanged. We saw the small cap IJR up 0.69 on the session, while the NASDAQ was down over 2%, being affected primarily by these large cap stocks. But the small cap stocks are starting to show the lead. I will cover this in great detail tonight as this rotation is starting to be real. Also, I expected to see our short-term database start to roll over. That didn't happen either. We actually got a net new buys after the session today. It appears anymore you get a 1% move, catastrophic thinking just flows everywhere, and market sentiment really deteriorated so quickly. As we look at the backdrop, once again, not just looking at a market index, but starting to look at a large universe of stocks, we're continuing to see that rotation occur. And guess what? It's happening exactly where you think it's happening. The small and mid-cap stocks are continuing to rotate into the mix, and that's what's kicking the database even more bullish than it was yesterday. Yesterday's action was dominated by the fundamentals, as it was believed that maybe there's a further deterioration of the economy, possibly because of the new COVID cases. All of this stuff is starting to pile up. In the end, I don't think this is material, and I don't see the big rollover happening here. There is potential for further downside, and I'll cover that in the technical section. On Friday, flash PMI and new home sales will be released. I don't expect there'll be material, but everybody's a little bit edgy coming into Friday's action, and we're likely to see some squaring of positions on Friday as well. So there could be some downside, but the parameters are clearly defined at this time. Once we get to close today, I'll be able to cover a much more detailed viewpoint as we come into next week. I don't see the S&P dropping under 3,200 at the moment. As we close out this week, we're seeing a reasonable sell-off in the NASDAQ. I set this up on Monday's video as I thought we would see a consolidation at these levels. That's exactly what's starting to unfold, especially in the NASDAQ, as a lot of these large cap tech stocks are starting to see some pressure. Let's go ahead and take a look at the charts and see what they're telling us for the close of the week. As I begin the technical section tonight, I want to go over the database, which I've been talking about all week long. And the daily 1.2 model has been very aggressive all week, continuing to have net buys throughout the week. We've watched it go from 74% to 86% bullish. And as I've been discussing, most of these stocks are in the mid-cap and small-cap areas. This is likely to continue, but I'm expecting to see a rotation in this database. You'll notice that we had 301 buys in 1.2 long and 152 sells, so a net 152. So not a lot, but we are starting to see rotation. And I'm going to go through Apple tonight to show you a trade that came on in early March, and it is exiting. So we do have a sell signal on Apple in the morning. The 86.9% level is likely to start to rotate as we come into next week. I've been talking about entering into a consolidation range at these levels, and we're starting to see those elements come into play. The red X next to it on the far left here, if I click on it, you'll see the symbol. There are literally thousands of stocks that look similar to the profile that I'm going to show you in a minute, where we've exceeded the holding period, we've exceeded the average returns, and a lot of the metrics that come out of our models. Where my cursor is right here, we saw a buy on 327, at 252.75. Yesterday's closing price 371.38, 46.93% gain. So we've issued sell order for tomorrow's open, and the system will fill this. So those of you that are using the WaveTech platform, any of the sells or buys that come out of our system are executed on the next day open. That's the next data point that we can execute on. This is an end-of-day process. We update the servers. The entire platform gets updated, all the portfolios, every symbol. Friday night, which is the big day of the week for us, the intermediate trades come out on Friday night for Monday's opening. I'll be reviewing that on Sunday's video. But this is significant in that there's a lot of symbols that have exceeded what's in the trade profile. Typically, Apple holds for 35 days. 36 days, we'll round it off. As of today's close, it's been long 82 days. So it's an underperform, which means it's held much longer than it normally does. The maximum has been 93 days it's held in the past, so it did not make a new record on this run. The profit is typically 17% on a 35-day trade, and on the standard deviation is 35.37. You'll notice that both of these values have been exceeded. There are thousands of trades that look like this that came in between this date, around 327, all the way into the end of May. And a lot of those symbols are starting to get long in the tooth. Not only have they held beyond their normal holding, they've also exceeded a lot of the profits because of the sharp rally that we saw. So there will be a rotation coming into the database, and it's likely to unfold as a sideways range that I'll be discussing here in a few minutes in the technicals. I discussed in the opening comments about this new leadership. That's exactly what we're seeing in the short-term database. We're seeing a lot of small and mid-cap stocks come into play. But as you look across the spectrum of charts here, on the first chart going left to right is the Dow Jones versus the NASDAQ. So basically long the Dow Jones, short the NASDAQ. The next one here is the S&P. The next one is the IJR. You can see how its pattern is just surging, so is S&P. The next one is MDY, which is the mid cap. And then the last one is the NASDAQ futures against the E-minis. Long the E-minis, short the NASDAQ. You can see that trade was not working very good, but now it's starting to work. And this is the very beginning phases of this. If I convert these charts over to a weekly pattern, they've all just begun, with the exception, and this is why I've been discussing this, the chart where my cursor is here, IJR, the small caps, have been setting up this formation for a while. The Dow Jones and the S&P have just started this. So these two center charts are illustrating that rotation to the small cap and to the mid caps. I've discussed this in great detail over the last 2 weeks, is that this rotation is critical for the markets to continue to move forward in a positive pattern. Go through in detail here in a minute, but I do believe there's a consolidation going to go on, and we're going to see this rotation continue and the formation unfold over the next 6 to 8 weeks. This is not going to be something that's going to happen overnight, but it's going to continue to happen. And I discussed this also last night, that what we might see is that even the NASDAQ goes down like it did today, down 2%. And in the case of the IJR, it was actually up 0.6. S&P and the Dow Jones weren't down as much, so these spreads are going to start to work from that standpoint. But what it's showing you is that there's not as much selling in these other indices as you're going to see in the runaway index, which has led the way up, which is the NASDAQ. As we look at the S&P cash, I've been talking about this upward slope in the market grid, and we finally have seen a bit of a change. It's still very narrow, but it is starting to show a downward movement, and this is likely to continue for at least 2 or 3 sessions and trading back into the support. The main support out there is visible on the weekly market grid, which I'll show you in a minute. On a short-term basis for today, we're seeing the downside being defined around 3206 to 3197. We are seeing some moderate pressure on the futures overnight. hour and a half from the London Open. We may see some more selling come in. I expect to see some squaring in positions as we come into the weekend, as folks are coming into the markets a bit nervous. But looking at the weekly chart, the definition on the downside is defined down to the S1 level, which is 31.97. If that printed, that would be an opportunity to buy, but use the market grid for the dailies to define where to buy on this. These numbers will look similar when they update tomorrow on Sunday night's video. I'll discuss this, but around 31.66, 31.36 is going to be the maximum. This suggests that the downside is limited into this spectrum. As I mentioned, a couple other things I want to point out. The PPMs on the weekly basis, you've got PPM 1 at 1.21, PPM 2 at a 0.46 positive, and PPM 3 at a 0.20. I will just tell you, this is not the setup for a major rollover in this market. Approximately another 70 or 80 handles down, but this is not the rollover that's likely to happen. That number, 1.21 on the PPM1, suggests that right around that extreme number that I just discussed, between that 31.66, 31.36, there was less than a 20% probability for it to decline below that level. So I'm not saying it won't decline to that level, but I don't see it declining below that level. We're not even going to have an opportunity to see those numbers most likely until sometime next week. The big sell-off, the big rollover is not here. This is not what it looks like. You don't have an upward slope channel on the weekly. You don't have positive PPMs at this level. It just doesn't happen. I've been watching these PPMs literally since 1984 when they were created, and I know them well, especially on the intermediate level. And the longer term level on the monthly charts, which I'll cover on Sunday night, way too many positives here. Also, going back to our intermediate database for a second, we're also at 61% bullish. This is not the setup. That's all I can tell you. Folks might say, well, we could have another black swan. We could have another February. I can tell you that our database, both on a weekly and daily, started selling in January. Mid-January, we were liquidating. We were selling lots of stuff. By the time we got into mid to late February, we had sold almost 40, 50% of the database had already sold out before the March happened. And of course, in March and the 1st of March, it just dumped everything. And then we came back in very quickly around 326. It was only out for about a month. But this entire pattern that we're talking about here is not the collapse. This is not the end of the world. Taking a look at the NASDAQ cash, we did make a slight higher print this week than last week, just by a few dollars. If the NASDAQ closes where it's at right now or lower on Friday, this is going to set the tone for more sideways action. The market grid is likely to continue to put a range of around 11,000 to the 10,000 level. STX on the grid is 99,778 and RTX was 11,027. I'm expecting to see some contraction of this range. You're going to see a squeeze on the market grid as we come into next week. So we'll have lower highs and higher low from the standpoint of what the numbers will be. And I will discuss this on Sunday nights when we see it. But once again, the PPMs, this is not the collapse. This is the sideways correctional phase, not a collapse. We're going to see a lot of rotation start to happen in the Apples and the Googles, and we've already seen Netflix and Microsoft. All these stocks that have been leading the way, they're going to consolidate at these high levels, and I believe there's still another run in them just based on all the action that we're seeing here. As markets unfold, and so will the analysis of what's going on. The final market that I'm going to cover tonight is the Russell. I normally don't cover this market, but it's likely to become a regular staple here for the next several weeks as I continue to develop this new leadership. Heavy black line going across the chart is the 200-day moving average. It's currently at 1467. When doing the research tonight, I ran across something I thought was really interesting is that the 200-day moving average and the 200-week moving average are very similar values because this market's been going sideways for so long. But if you look at PPMs, they're accelerating. You see PPM 1 is at a plus 6.3. PPM 2 is above both its first and second derivatives, and PPM 3 is still negative. Going to the weekly chart and looking at giving a little better perspective, this configuration on the PPMs. Now the PPMs, if you're first time watching this channel, stands for price pressure momentum. It indicates what the probabilities for the moving averages to hold, and I use the 10, 21, and 40 period moving averages. The 10 period moving average or the 10-week moving average in this chart is changing by 1.66% per week. And what those are telling us that everything is accelerating on all three of the trend levels. Once again, this is not what it looks like when the markets are about to roll over and collapse. Quick comment on the 200-week moving average. It's at 1488. The 200-day moving average is at 1466. We close at 1490 or higher today. That's going to put us over the 200-week and the 200-day moving average, and we've got this acceleration going on in the underlying trend. Monthly graph has some work to do, but we have moved up to the 10 and 21 month moving averages. They're still slightly negative. This is going to take most likely another 2 months before the downward pressure will dissipate on the longer term charts. On a weekly analysis, we're going to see a continued bias to the upside. That 200-week moving average is going to be a key. We may just trade in a sideways range. We're going to just need to hold some reasonable parameters here. That will be enough for these PPMs to continue to evolve and start to indicate higher prices. NASDAQ's going to consolidate, trade in a wide range while the other indices start to play catch up. This will complete this video. Have a great weekend. We'll talk to you on Sunday night.